Bitcoin is flashing strong warning signs of a major move higher, and investors who have been watching the charts closely are now on high alert. As of late April 2026, Bitcoin has clawed its way back from the lows near $60,000 seen earlier in the year, steadily reclaiming ground and testing critical resistance levels that could determine the trajectory for the rest of the cycle. Welcome to Crypto Hub, your trusted source for timely and in-depth cryptocurrency market updates. Today we dive into the developing story around Bitcoin's potential breakout, examining the technical signals, institutional momentum, macroeconomic tailwinds, and what a successful push toward $80,000 could mean for the broader market. The cryptocurrency market has shown renewed signs of bullish conviction in recent weeks. Bitcoin, the flagship asset, has been consolidating just below the psychologically significant $80,000 mark after a robust recovery phase. Trading around the $77,000 to $78,000 range in recent sessions, BTC has repeatedly approached the $80,000 threshold, only to face concentrated sell orders that have capped immediate upside. Yet, beneath the surface, multiple indicators point to building pressure that could soon overwhelm these sellers. This is not mere speculation. It reflects a confluence of strong fundamental drivers and improving technical conditions that serious market participants are monitoring with precision. One of the most compelling factors supporting the bullish case is the sustained inflow into spot Bitcoin exchange-traded funds. Over the past several weeks, these investment vehicles have attracted billions in fresh capital, with weekly inflows often exceeding $1 billion and cumulative figures reaching impressive totals since the start of the year. Institutional investors, including major players like BlackRock, have demonstrated consistent appetite, deploying hundreds of millions in single-day purchases on multiple occasions. This institutional buying provides a structural bid under the price, absorbing selling pressure and gradually shifting the supply-demand balance in favor of bulls. Unlike retail-driven rallies of the past, this demand comes from sophisticated capital allocators who view Bitcoin as a maturing asset class suitable for long-term portfolios rather than a speculative gamble. The recovery narrative gains further strength when viewed against the backdrop of Bitcoin's performance earlier in 2026. After experiencing a sharp drawdown from late 2025 highs above $100,000, with prices dipping toward the $60,000 zone in February, the asset has staged an impressive rebound of more than 25% in a relatively short period. This move has been accompanied by higher lows on the charts, a classic sign of accumulating strength. Analysts note that Bitcoin has formed patterns such as ascending triangles and bullish channels on multiple timeframes, suggesting that buyers are stepping in more aggressively at each dip. The dominance of Bitcoin within the broader crypto market has also climbed above 60% at times, indicating that capital is rotating back into the king of cryptocurrencies as confidence returns. From a technical standpoint, the battle around the $78,000 to $80,000 zone is pivotal. This level represents not only a round psychological number, but also a confluence of prior resistance from earlier in the year, including areas where significant sell orders have accumulated. A decisive daily or weekly close above $80,000 would invalidate recent bearish structures and potentially open the door for a retest of higher resistances, including the 200-day exponential moving average near $83,000. Such a breakout could trigger a short squeeze, as leveraged positions on the downside have built up during the consolidation phase. Liquidation data from recent weeks shows hundreds of millions in short positions vulnerable to rapid unwinding if momentum accelerates. Market sentiment indicators further reinforce the shifting landscape. Prediction platforms like Polymarket have seen odds for Bitcoin reaching $80,000 within April swing dramatically higher, at times exceeding 70% probability based on trader positioning. While crowd euphoria must always be approached with caution, the underlying data, rising ETF inflows, declining exchange reserves as holders move coins to cold storage, and improving on-chain metrics suggest this optimism has some fundamental backing. The relative strength index and moving average convergence divergence on daily and weekly charts are showing signs of bullish divergence or crossover patterns, providing additional confirmation for those employing technical analysis. Macroeconomic conditions are also playing a supportive role. Easing geopolitical tensions, including extensions of ceasefires in key regions, have reduced risk premiums across global markets, allowing risk on assets like Bitcoin to benefit. Lower oil prices following such developments have eased inflationary pressures, creating a more favorable environment for growth-oriented investments. Meanwhile, expectations around monetary policy, with central banks navigating a delicate balance between inflation control and economic support, have kept liquidity conditions relatively accommodative for digital assets. Bitcoin's historical correlation with Nasdaq and other growth indices has been evident during this recovery, as equity markets have also found footing amid improving sentiment. It is important to contextualize this potential breakout within the longer-term Bitcoin cycle. The 2024 halving event continues to exert its influence by reducing the rate of new supply entering the market. With the block reward now at lower levels and the total supply cap of 21 million coins remaining immutable, each halving historically sets the stage for supply shocks that manifest in the following years. Although some analysts debate the exact timing of cycle peaks, the combination of reduced issuance and growing institutional adoption creates a powerful tailwind. On-chain data reveals that long-term holders have been accumulating rather than distributing at current levels, further tightening available float and supporting price floors. However, no market move occurs in a straight line, and prudent investors must acknowledge the risks. The $80,000 level has proven stubborn, with sellers defending it vigorously in recent attempts. A failure to break through could lead to a retracement toward support zones in the $72,000 to $75,000 area, where previous consolidation has occurred and where buyers have shown conviction. Deeper supports lie near $68,000 to $70,000, aligning with moving averages and prior swing lows. Volatility remains inherent to cryptocurrency markets, and external shocks, whether regulatory developments, unexpected macroeconomic data, or shifts in risk appetite, could temporarily derail the bullish thesis. Regulatory progress also merits attention in this environment. Discussions around clearer frameworks for digital assets, including potential innovation exemptions and more crypto-friendly stances from securities regulators, could further boost confidence. Initiatives that reduce uncertainty and encourage responsible innovation tend to attract additional capital, particularly from traditional finance institutions that have been cautiously increasing exposure. The maturation of the Bitcoin ETF market itself serves as evidence of this integration, providing regulated on-ramps that have already funneled tens of billions into the ecosystem. Beyond the immediate price action, the broader implications of a Bitcoin breakout to $80,000 and potentially higher would be significant. It could signal the resumption of the primary uptrend, drawing in sidelined capital and lifting sentiment across altcoins and the wider digital asset space. Bitcoin's role as a store of value and inflation hedge gains renewed prominence in such scenarios, especially as investors seek alternatives to traditional fiat systems amid ongoing global monetary debates. For miners, higher prices improve profitability and network security. For holders, it validates long-term conviction, and for new entrants, it underscores the asset's resilience and growth potential. Analysts tracking derivatives markets note that open interest has remained elevated while funding rates have stayed relatively balanced, avoiding the extremes that often precede sharp corrections. This measured positioning suggests the rally has room to develop without immediate overheating. Volume profiles indicate healthy participation, with buy-side pressure emerging at key levels rather than thin, speculative spikes. Combined with the steady reduction in Bitcoin available on centralized exchanges, the lowest levels in years, this paints a picture of genuine accumulation rather than fleeting hype. As we assess the probability of BTC breaking and sustaining above $80,000, the weight of evidence leans bullish in the near to medium term. Institutional flows provide a reliable demand base, technical patterns show constructive setups, and macroeconomic relief has removed some headwinds. Prediction markets and sentiment gauges reflect growing conviction, while on-chain fundamentals align with a tightening supply narrative. Of course, confirmation will come from price action itself. A clean break above resistance with increasing volume would be the strongest signal for traders and investors alike. At CryptoHub, we emphasize the importance of disciplined analysis over emotional reactions. While the excitement around a potential $80,000 breakout is palpable, Participants should maintain risk management practices, diversify thoughtfully, and stay informed about evolving conditions. Dollar cost averaging into strong fundamentals, setting clear entry and exit parameters based on technical levels, and monitoring ETF flow data weekly can help navigate the inevitable swings. Looking ahead, if Bitcoin successfully clears the $80,000 barrier, the next milestones could include challenges toward 85,000 and eventually retesting prior cycle highs. Conversely, sustained rejection might necessitate a period of base building before another attempt. Either path offers opportunities for prepared market participants who understand both the upside potential and the disciplined approach required in this asset class. In summary, the current setup for Bitcoin represents one of the more intriguing inflection points of 2026 so far. The market is turning increasingly bullish, supported by institutional demand, technical improvement, and a more constructive macro backdrop. Whether the breakout materializes imminently or requires additional consolidation, the underlying drivers suggest that $80,000 is very much in play, with potential for further gains should momentum build. Investors and enthusiasts alike would do well to watch these developments closely, as they could shape portfolio performance and market narratives for months to come. Thank you for joining us on Crypto Hub for this comprehensive update on Bitcoin's breakout prospects. Stay vigilant, stay informed, and we look forward to bringing you the latest insights as the story unfolds. Subscribe and enable notifications so you never miss critical market movements. This has been Crypto Hub, where clarity meets cryptocurrency.